the conversation. It's the conversation. Y'all ready? Let's go. No filter, no restrictions. You about to get my opinion in its purest form. So my words, don't try to spin them. What I said is what I said. And what I said, I meant it. The gloves are off now when I'm coming out swinging. So engage in verbal combat, but you better be ready. Cause this here for me is light work, even if the topic's heavy. I'm ready for it all with no running from nothing. You just take the time to digest what I put in, no rushing. But time is moving, don't waste it. You want the real, come and face it. Come sit and talk to me if you want it straight without a chaser. And it might burn a little when you step on up to taste it. But it's nothing harsh, I promise. Just a little conversation.
One. Hello, everybody. How are we doing? Welcome to the first episode 1, 2024 of The Conversation. Before we get started on what we're talking about today, I'm going to ask you that insincere question that everyone asks, but they really don't care is, how's everybody's new year going so far?
All good.
Yeah.
Winter storm last night.
Oh, yes. Me and Mark were in a monsoon on the way back, Mark, from driving. Yesterday, I drove 2 hours to Greenville to be interviewed by the news on a segment called Hello ENC. And it was so windy that my Jeep kept trying to get pushed off the highway. So that was fun. But today, we are here with our guest, Greg, who used to be known as Weenies from Weenies.
Yeah, you can call me Weenie, Greg. All the same.
My market expert, as I would call him. Those of you who watch My Perspective Monday would remember his Weenies weekly market update, where he would tell Mark how all of his retirement funds are going to shit. So, today we're going to talk about how, presidents, administrations, government officials, it's going to be, anything, but how what they do and what they say, whether verbally in a speech, in a tweet, how that affects the market. Before Weenie starts diving into things, what's your guys' assessment from where you're standing on how the presidential actions affect the market?
Well, pardon me, John, before somebody responds. You want me to introduce Weenie when the time comes?
Sure, yes.
You'll always give a good
I love it. Some people love a man who can introduce a weenie. We're going to keep moving. What's your understanding of how a president can affect the market? Everybody but Greg on here.
I guess I'll chime in first. They have both a direct and indirect impact on markets. Certain things that they say or certain policies that they pass can cause even those investors to feel either comfortable or uneasy. And when you see that type of activity, it's definitely going to cause some level of fluctuation, which again also can have the other indirect impact where, consumers are then trying to now decide whether they want to be safe or be aggressive in their spending habits in some in some sectors, in some areas. So I think there's both direct and indirect impacts of their actions, be it from just a tweet, speech, or otherwise, or policy.
Mark?
Definitely.
Well, I thought I'd go last. Our political scientists would go next.
Okay. I love how this is starting. I love it.
Yes.
Well, markets, yes. You can, because markets are specific things that, we can have particular markets we can talk about for different things. And certainly we can see presidents having huge effects, on things like the oil market. Trump had a very deleterious effect on the U.S. A whole bunch there. I'm going to just take this point of view of I don't give a shit about markets because I give a shit about the economy. And when it comes to the economy, the big ass thing that is the United States, presidents act, there's a question there of how much do we do? So it's a signal versus the noise situation. Now, you can get filthy stinking rich off of noise. You can also lose your 401k off of a mistake betting on, and I'm calling it noise. I'm being dismissive of particular market fluctuations only when we put them into the context of growth of GDP or the ratio of government debt to GDP. And those are the things that I spend more of my life worrying about. So there are two different ways you can look at it. And so I'm gonna be an ass and take that point of view.
Okay.
That's a good point of view.
Well, my take is, first off, the impact on markets. I think short term, a lot of things can affect, and Greg will address this, I'm sure.
Oh, yeah.
The short term fluctuations in markets. But the long term, though, I think the research suggests, history suggests, it's not going to make that much difference. Unless just something totally unforeseen happens. But I take a different take than Dave did, though, because I do give a shit about the markets, and for selfish reasons, because my retirement is vested there. But I've also been told over and over again, don't bother checking it every day. If you're in it for the long haul, don't worry so much about who the president is. So with that said, I'll go ahead and introduce our market analyst, Weenie, with a Weenie market update.
You do such a terrible Greg impersonation, and I love it.
I couldn't have done it better myself.
So what do we got to talk about today, Weenie?
Yeah, we're going to talk about presidents and how they affect the market. And if you guys don't know me, hi, I'm Greg. I'm a market technician. I'm actually a few weeks away from becoming a chartered market technician. I have all my sponsors and did all the exams and stuff like that. So I'm a big stock market nerd. So we're going to talk about how presidents, but not just presidents, how anything affects the market, because you all have an impact on the market. You know, if you buy a share of Apple stock, that's kind of like you voting with your money. Hey, Apple, you're doing some cool things. Take this money and make me more money at some future date. So everybody really affects the stock market. Obviously, a president will have more impact than you or I, but people vote with their money. They vote by spending in the economy. So if people are optimistic and they're feeling good about the way the economy is going, maybe their wages are going up, maybe prices aren't too bad or inflation is stabilized, then that can be bullish for the economy. It increases that total money supply, essentially. And that shows up in earnings, and then stock prices go up. Okay. So everybody has an impact on the markets, but some more than others.
Yeah.
And
I ain't concerned with everybody.
Yeah. I do also want to say that stocks and the economy, they're not the same. However, they are somewhat related. So stocks actually tend to lead the economy by about 6 months. So if you see stock prices start to sharply decline, that could hint, it's not always perfect, that could hint in 6 months around that time frame there could be a recession. And it's not always perfect, but it's just something to consider, that stock prices themselves are a leading indicator. But let's talk a little bit more about presidents. So when it comes down to presidents and their impact on the market, I want to first start off by saying it's not exactly the actual president themselves that has the most impact. It's usually actually the cycle. And actually, the presidential cycle, it's every 4 years. That's one presidential term. But it's also a stock market cycle as well. It's actually called the presidential cycle. So it's every 4 years. So this is from my CMT textbook. And essentially, the last cycle was 2016. I guess the last cycle is 2020. So we're coming up on a new presidential cycle at the end of 2024. And just some quick notes, if you're taking notes, the third year of the presidential cycle tends to be the strongest for the stock market. So if we just were to only invest in a vacuum and make no other decisions, you tend to get a little bit of a better deal if you buy the second year of the presidential cycle.
Well, why is that?
It's just a weird, odd tendency. I think it could be, propping up the market in front of the election. There's many factors at play. It's really interesting, though, that the third year of a presidential cycle tends to be strongest. And you can see this in the latest 2 market cycles as well. So 2016 was the start, but 2019 was actually a really strong stock market year. 2020 was the next start of the cycle. And actually last year, 2023 was a really strong year for the stock market. So I think the S&P 500 is up about 23%. And so that's more than double the average yearly return.
Okay, so hold on, because the reason why I asked that is because Dave used that word noise, and I say noise to me and Dave. I don't know if it's the same thing. Noise is when things are said that may not be exactly true. Like on our last episode, someone said the Biden closed the pop lines, and that's why gas prices went up. And Dave kind of explained the ins and out of how that happened from beginning to end. So if I'm taking President A and saying in the 3rd year, that's the best year for the market, and it's always like that, no matter if you like that president or not.
It's not always like that. It just tends to.
Okay,
These are all
well, you get where I'm going when you say tends to.
Yeah.
But isn't someone saying, well, that's directly because of that current president and not because that's the trend?
Yeah, you can attribute whatever performance is to that president. You can attribute it because the sky is blue. It's really difficult to pinpoint one thing because, again, there's so many factors at play with the stock market. But yeah, you could say, oh yeah, the market did really well this year. This person was president. I'm voting for him again. That can be a factor, and some people will make a voting decision based off that.
Dave, what's the danger of that?
Yeah.
Say what?
What's the danger of that?
Making a voting decision off of it? Well, there's a lot in that, and I don't want to. I think we want to let Greg get through this, what he's presenting, because there's different views on how people vote. But I think the big point, though, I as I'm listening to this, is Greg is presenting. Greg, if I may, if I'm interpreting this right. This is an observed cycle. This is what we would call an empirical regularity. The causal factors beneath it are that's what theories are, right? Theories are conjecture about causality. And so a lot of market analysis is you see something happen and then you go, well, I don't frickin' know why. And so, by the way, noise, this is not noise because this is a trend. Noise tends to be little fluctuations that have that are not, around a trend or around a thing. So that's it. Let's get back to Greg. I'm interested.
I know you're interested, but I have to do this. I have to do this thing called producing. So that's what I'll stop producing and I'll let.
Why am I up here?
Let me. God damn it! It's the first episode of the year, and I'm not gonna get into it with you, Dave.
Dave, I really liked your input though on noise. Noise is just something that you could potentially misinterpret as a trend, but it's just randomness. There's a little bit more entropy. There's just random stuff going on, price fluctuations going back and forth. But yes, this is more of a tendency or a trend. So really good observation. Okay, so that's what I wanted to start off with mostly. So 2019 and 2023 were strong because they're the 3rd year in that presidential cycle. Okay, so that's kind of like the main point, but we can go a little bit deeper and talk about how a Republican versus a Democratic president might affect the stock market. And we can look at history to make, an informed guess towards the future. So Republican presidents, when a Republican president takes office, bank stocks tend to outperform. So think of like JP Morgan, Bank of America, Wells Fargo. Those type of stocks tend to outperform. It has to do with, taxes and interest rates and all that other stuff, but that's something to think about. Another thing is defense. So if there's a Republican president, defense stocks tend to do very well. Think of like Lockheed Martin or there's some defense ETFs. Yeah. So that's what you want to think about if there's a Republican president. And sometimes Republicans, they tend to have less corporate taxes. They want to, decrease taxes. And that in turn helps, businesses' bottom line. And then that shows up in earnings. And when earnings do good, stock prices tend to move significantly higher that next day. And that brings up the whole ETF. And then everybody's 401ks go up. Okay. So one thing that's important to know is we're talking about Republican presidents here. We're also going to talk about, oh yeah, one last thing. Oil tends to have, a lot of upward price movement. And even this year, I'm forecasting higher oil prices. Not so much because we may have a Republican president, but when there tends to be global, wars or, any geopolitical concerns, oil prices tend to go higher. Sometimes that can reflect in oil stocks as well. So like ExxonMobil or Occidental Petroleum, Chevron, those type of stocks could potentially outperform along with other energy stocks. Okay. When we get into Democratic presidents, healthcare stocks tend to outperform. So think of like Eli Lilly or like Medtronic, Abivai. Utilities tend to do well. Think solar and renewable energy. Those type of sectors tend to outperform when we have a Democratic president. So maybe electric vehicles could outperform if we get a Democratic president. Okay. So now I want to go into just a little bit of some case studies. Okay. So Ronald Reagan, he was president from 1981 to 1989. He created what's called Reaganomics. And that's just what? Decreased taxes and decreased regulation. So that was kind of revolutionary. And the Dow Jones, so the index that people think of when we talk about the stock market, it actually doubled during his presidency. So you invest $10,000 into the market, out comes $10,000 8 years later. Pretty cool.
Back when the Dow Jones was in the hundreds.
Yeah, exactly. You can see it now today.
Well, you just wait till you're done, and me and Harold talk about Reaganomics. All right, I'm gonna let you continue.
You can bring up other criticisms, but I'm gonna have to say there ain't nothing factually incorrect about what he
No,
said.
there's nothing factually incorrect about what he said.
Throw that out there.
No, there's nothing factually incorrect about anything that he said. There's just some things in Reaganomics that ain't on the screen that we'll get into later.
And I'd love to hear you guys' opinions. Like, I don't have a very long presentation. I just want to give you guys a brief overview.
Well, John, it might come at a price. You may pay a price somewhere else, is what you're saying. I mean, it's kind of good for your bottom line, but is there a social cost involved that you can't put a dollar figure on?
Exactly.
Yeah, right. And in terms of everything that he's talking about, it was extremely fruitful during the Reagan administration. That's not what I'm disputing at all. Not one iota of dispute in that.
But I got a feeling he's going to say the 90s are pretty good under a Democrat, too.
Well, let's see.
Let's
Let's get into it. Barack Obama?
You're skipping over Clinton? How the hell do you skip over Clinton?
Yes, we're still.
All right, no, keep going. Do what you're going to do.
I need William. Where'd William go?
Basically,
Hey, wait a minute.
I used ChatGPT to help me construct this presentation last night.
Wait a minute.
What came up?
You're skipping over William H. Taft, damn it.
We can go down the line of presidents and do some research.
I thought we were going to shut up and let Weenie go.
That's impossible.
I'm here with you guys. We're all here together.
Let's go, Wing.
All right. So basically, Obama took office during 2008. This was during the financial crisis. And there were actually people with bachelor's degrees trying to, get jobs. They were being baristas. I actually have one of my business partners. He had a marketing degree, and he walked into, what was it? It was like an Olive Garden or something. And he applied, and they said, "Oh, we just don't hire our waiters off the street." And he had this fancy resume. So basically, it was a tough time during 2008. People were potentially over leveraged on their homes. The financial system was really tested during this year. And there's a lot of really interesting studies during the 2008 financial crisis that we can use to potentially project forward. But we're in a totally new world, a totally new economy. So I want to take all that analysis with a grain of salt. But during this time period, there were stimulus checks, there were bank bailouts just to keep the market alive. And what happened was there was a lot of banks that would potentially get underwater on their loans because people were over levered. If you guys saw the Big Short, do you guys remember that scene where there's the stripper that she had like what 3 homes, and it was really interesting because people, if you just had enough money to just get a little down payment, boom, you get a home, and that really just kind of propped up the economy on a house of cards. But stimulus checks were given out and bank bailouts actually kept the economy alive, and the S&P has gone up over 570% since that time. So it seemed to have worked out, at least in that scenario. So that was under Barack Obama. That was his effect. Now we're going to get into Trump tweets. Okay. So those are kind of like more like general. That's kind of more generally how presidents affect the market. This is a little bit more direct. Some are instant. So Trump tweeted, "Trade talks are continuing, and during the talks, the U.S. will start on September 1st, putting a small additional tariff of 10% on the remaining $300 billion of goods and products coming from China into our country. This does not include the $250 billion already tariffed at 25%. And I was actually trading the market during that time. And what happened? An immediate market reaction. It was a big drop. I think it was like 0.5%. And then there was increased volatility. So just increased ranges on the day. So what's happening is algorithms are like reading that tweet, and then they're changing the supply and demand instantly in the market. And sometimes you can catch it. Oftentimes I've found it's not very profitable or smart to trade it. And I'm a pretty like seasoned trader, if you will. I've been trading for 7 years. I think for most people, they should just be, investing into the market. And Mark alluded to this earlier. Like, don't look at your portfolio day to day. If you're really in it for the long haul, it really won't matter. And it all comes down to the market has performed well in the past. That's the only thing that we can go off of into the future. So we have to assume that it'll always go up. And if it doesn't, and it is crashing and it never comes back, you probably have much bigger things to worry about than money itself. So that's something to think about. But
called the Rip Van Winkle strategy. Go to sleep and wake up in 20 years and see what happened.
Yeah, seriously. That could be really interesting.
That's actually the academic term for it.
Wow, that's hilarious.
Behavioral economists.
Oh my gosh, that is amazing. I'm gonna write that one down.
Yeah, if your retirement is vested in, say, TIAA-CREF, which a lot of professors do, I don't know if you do that or not, David, but that's essentially what they advise until you get within, say, 5 or 6 years of retirement. Then you start tinkering and making changes and so forth. So contribute, forget about it. But one thing though, Greg alluded to this. He said something about I think you said Democratic presidents. The market tends to be the stocks that perform well are the, what did you say, energy conscious stuff like that. I mean,
solar, healthcare, those type of things.
The part of my portfolio that's performed the best in the past, I don't know exactly 6 months or year or so, has been, I think they call it like social growth and stuff like that. It's investment in green energy, all those types of things. And while that may be a tad more, say, friendly, if you will, of Democratic administrations, I think whether Republicans gets elected or not this year, I think that's a trend that's going to continue. Because I don't think any president is going to announce a halt to investment in green energy and things along that line. It's here to stay.
Definitely.
By the way,
I agree with that sentiment as well. I will also add that it can also just be energy in general, and then eventually we'll want to focus our efforts. One thing to think about too is uranium. People have different beliefs about uranium and the use of it. People
leave my anium out of this, please.
What's that?
Leave my anium out of this, please. It's not a proper discussion. There are children watching.
Circling Uranus,
I was stretching for a Uranus joke.
It does not matter
like,
how educated a man is. He's still going to be immature. It doesn't matter. We're all guys. Everything's a dick joke and an ass joke.
I can joke around once we're not talking about something that can get me canceled.
Well, you are.
I
You know what?
feel like you don't understand. I feel like what's his face, Colin Yost at the end of year when he has to read the jokes that Michael Shea wrote for him. Just saying. Just saying.
This is why Mark goes, well, leave it up to the political scientists. Okay, I'm getting on Mark's side now.
I'm sorry. Anyway, carry on.
No, definitely.
So
I will.
one of the big reasons why I had you do that is because, again, when I talk about the noise and I use the pipeline for an example, is the last slide you showed was when Trump would tweet something, right?
Yeah.
And then the market drops a half a share to half the people watching. They have no idea what that means. The others, they do. And then people will take that statement and run with it and say President Trump is tweeting, it's destroying the market, and yada, yada, yada. That's what I mean by noise. Not defending President Trump. I'm just saying that's what I mean by noise.
Yeah. Yeah. I mean, it's one of those things where people and like investors and portfolio managers like me, we're trying to determine how impactful is this? Does this affect our long-term thesis or not? If not, that's fine. If it could potentially affect the market for a few weeks or even months, we might place some hedges or decrease positive delta, which just means sell some shares or, maybe go short something that's relatively weak with a defined type of risk. Because shorting, you can lose infinite amounts of money if you don't control your risk.
Now, you
But
said Democratic presidents' healthcare seems to be a better investment in the stocks, and that goes up. So, how was that affected when Obama was going over Obamacare a lot? How did that affect that part of the market?
that's a really good question. I can literally pull up a chart of healthcare. It's called
Ooh.
XLV.
Oh, wait, hold on. Let me get you on screen.
Right here.
Oh,
It's
thank you.
called XLV. So this is the healthcare ETF. This is a basket of healthcare stocks. And we're going to go on a weekly time frame. So let's go to a monthly time frame. So each candlestick right here represents 1 month of price action. So when did we say Obama was president? 2008?
Yeah.
2000.
Yeah.
Starting in 2009.
Okay, starting in 2009. Let's start right there. So that's right here, right at this blue line. This is the start. And this is what healthcare has done since then. Technically, pretty much everything in the entire stock market has gone higher. But since then, healthcare stocks, the basket of healthcare stocks has gone up 500%, 519%. So it did perform well. It's tough to say whether it outperformed. What we do if we want to determine if it outperformed or not is we compare it against a benchmark. Our benchmark is usually the S&P 500. That's my favorite type of benchmark. So I'm going to type in SPY. This is the S&P 500 ETF. This is the 500 largest companies in the United States. And we can compare. So remember that number, 519%. We can go back to 2009. That's right here. 09. That's when Obama started. We can take a look. It's not going to be exactly perfect, but the market is up 440% since that time. So healthcare did outperform by a bit. So that's something to consider. And that's on a decent time horizon. 15 years-ish, 14 years. Yeah. So that's something to consider.
Now, I want to circle back a bit to President Clinton.
Okay,
because for what you're talking about, the Clinton administration, I think, is a really important case, and I highly recommend you read Bob Woodward's book, The Agenda. I believe it's the agenda. He writes a series of them. In The Agenda, he talked about Clinton's decision making and process. And the thing about the Clinton administration that I think is so important is that Clinton came in with like Robert Reich, and he came in with these strategic traders who are like, oh, we want to, do all this investing and stuff as one part of his team. He also had Leon Panetta and Larry Summers and folks who were more traditional market-based economists, and they had a very different point of view. And back then, we had the maestro himself, Alan Greenspan, running the Fed. And one of the interesting things was Clinton had people in one ear telling him you've got to be aggressive, you've got to get government investment in projects like, oh my God, the Germans and the Japanese are investing in digital or not digital, high def TV. We need to create government funding to compete with them, right? On the other side, the guys are like, well, it's a market, baby. You don't do that. You let the market decide. You don't pick winners, yada, yada, yada. And in the end, though, in the process of his administration, they ended up, he ended up going with the traditional guys because Alan Greenspan presumably also went in and talked to him a lot. And Clinton, in talking to Alan Greenspan, like you just get the sense he pulls out a notepad and starts taking notes. And so by the end, or actually not very soon, within the Clinton administration, they developed a model of, how the government should act. And it pissed off a lot of people because it was this idea, no, you don't pick winners. You don't intervene. You are very circumspect about what you say, because if you say the wrong thing, the bond markets will screw you the next day. And at one point, Clinton actually got kind of pissed. He's like, great, we're Eisenhower. We're Eisenhower Republicans, right? And one Democratic staffer was quoted as saying, if there's reincarnation, when I come back, I want to come back as the bond markets because they can intimidate anyone. And so the Clinton administration eventually, Leon Panetta became there. Larry Summers, well, he started signing our currency, and so that team won. And so when you read that book, it's about an American administration getting it right. And they wrote the book for Democrats, right? One thing about subsequent Democratic presidencies, White Houses, is the team. They get the team. They've got this team, and they've got kind of a playbook that they fairly consistently go with. And, when you looked, I remember when I was deciding, was I going to vote for Barack Obama or John McCain, right? Because remember, back then, Republicans aren't crazy, crazy people, although we did have Sarah Palin come in. I remember looking at who I was going to vote for, because John McCain is kind of, he's in my wheelhouse, right? John McCain's like a personal hero, right? So I'm going to vote for this dude who's like a senator versus like a war hero, right? That's going to happen.
Yeah.
One thing that I did vote for Obama because, well, Sarah Palin, but also the team. Obama had this team of very competent economists that he was bringing in, and he was getting the band back together from the Clinton administration. To a certain extent, Biden is in the same boat, right? Biden's got that same thing. So I think if you go back and you read the agenda, you read the birth of a Democratic Party approach to managing their White House, managing their economic policy, that quite frankly, Bush failed. W. Bush failed to pick it up and in fact violated it. He assembled a team and then famously didn't do what they suggested. And Trump didn't give a crap. Trump, would say shit like that tweet you had. He would say stuff and you'd almost suspect him of manipulating the market. If you knew a day before he sent that tweet what he was going to send, you could have made a killing.
Oh, yeah.
But
Hundreds
we
of
know
thousands
that he didn't know he was going to send it before he hit.
Yeah, he didn't know he was going to send it before he sent it himself.
And so his was the utter, and so, I mean, he's not even wrong. He's just out there in some weird space. But anyway, I just highly recommend. I think you would absolutely find the agenda to be fascinating to see. Papa Greenspan back in the day,
I will definitely be reading that.
All
I,
right.
I really enjoyed that. I'm really impressed at how knowledgeable you are on these subjects as well.
Don't be, don't be. Dave knows. Dave's
Don't
forgotten more stuff than I've
Well,
learned.
I do political economy. Okay,
Yeah.
so this is in my wheelhouse.
Wait, hold on, Mark. Mark is chomping at the bit to comment.
Get in there, Mark. Come on in.
I had a wrinkle of that, and Dave's a lot more qualified to discuss this. Has a lot more expertise than I do. I'm not a political economist, but one thing you did, David, I don't know if this is relevant or not, but I remember back in the '90s, that was the age of the .com boom, and it was kind of hard not to win back in those days. So, I mean, while Clinton gets credit for doing stuff right, he was also governing at a fortuitous time. In the state of North Carolina, we had a great time back in the '90s. In fact, the last great governor we had was Jim Hunt. Now, was he a great governor, or was he just governing during a very fortuitous time in our history? And the economy was.
Well, well, yeah, but I think we're being a little disingenuous if we're because it almost and correct me if I'm wrong. It almost sounds like you're saying whoever was president during the Clinton administration, the same thing would have happened.
Well, and to a certain extent, yeah, you would have had good economic times. There is that. Another, just to go with Clinton again, they balanced the budget. What's his? Oh, Nobel-winning economist turned New York Times columnist. I forget. Oh, wow. I'm blocking on the dude's name. But he wrote The Age of Diminished Expectations, right? And he, I'm blocking. I have Larry Summers coming in my head when I should have. No, it's not coming out. Come on, the dude. He's a New York columnist, Times columnist. Everyone hates him, but he won a Nobel Prize in economics, and he.
It wasn't Krugman.
Krugman, thank you.
Oh,
Krugman. Krugman wrote The Age of Diminished Expectations, and he said the one thing the American economy really needs is to balance the budget. But he predicted it was the one thing that the political system would never do. And within 5 years, the political system. Now, we have to say, in all fairness, it's Bill Clinton and Newt Gingrich, right? It was a bipartisan effort with Republicans who, swear to God, I'm not making this up, cared about policy, got involved in substantive policy debates where they actually considered the policy outcomes of what they did. It was amazing. I couldn't believe this shit. But we had intelligent discussions in committees saying, how do we balance the budget? How do we reform welfare? How do we produce a balanced budget? It was this bright, shining moment before the whole Monica Lewinsky thing came and ruined it all. But so my point about Clinton is, they balanced the frickin' budget, him and Gingrich. I'm going to give Gingrich and the Republicans of that era an assist on the play. But that is something that we can't take away and we haven't seen. And it's important to remember that they can get together and do something right and difficult. So,
I think also perception is reality, right? And depending on how you and the people around you are doing in your life at the time is your perception of how the economy and the market is. And it could be the total opposite of what it factually is doing. Is that, everybody get where I'm going with that, what I'm saying? If it's shit for a certain sect of people, and I'm not just saying race, I'm just certain sect of people, no matter if it's a town or a city in a certain area, and the economy is booming, but if it's not for them, their perception of the economy is shit.
Oh yeah. But if mass misperception creeps in, then that's a problem. I ran this morning in preparation for this. I just did a quick Google thing.
Yeah.
Said something. The question I asked was, okay, when does a market perform better? Doing Democrat, Republican, and all that. And the people who did this little website thing, interesting result. I don't know if there's a reason behind it, or if it's just an artifact, just a coincidence. But their analysis was, we tend to do better when there's a Republican president, but a Democratic Congress.
Interesting.
Whether there's a reason for that or not, or whether that's just an artifact or their algorithm
Wow.
Hey, we don't have factual evidence because I haven't looked it up, but we can always give our opinion on why we think
Oh yeah,
that's the
the
case.
opinions that matter.
Yeah.
Yeah. So why do you think that is, Mark?
I don't know. I was a little surprised to hear that. I've always heard that it's a myth that Republican presidents are market friendly. That's kind of an urban legend. When actually it's about the same, or perhaps the Democrats may be slightly better. But usually, when you hear that, you don't take into account what kind of Congress they had. So, like Dave said a while ago, we did all this good stuff when we had a Democratic president, but a Republican Congress. So who knows? But now I don't know. And okay, which house of Congress? Who controls what? So it's like Greg. There's so many variables involved here. It's
Definitely.
yeah. And
That's
again,
actually the next part of my slide is that it really doesn't matter too much. And it's like, what, are you going to change your investing philosophy because of who's president? You might, but you probably don't need to.
now, your long term. Oh, don't do that. It's usually what
Yeah.
they say.
Yeah.
You had a next part you were saying, or was that the last part?
I've got two more slides, and that's
Oh yeah, go ahead.
Yeah,
Give me
let's
your
see
next
the
part.
end of it.
all right. This is the end of it. So basically, after the Trump tweet, market recovered. The market always tends to recover. That's what we were getting at earlier, right? So people always ask me, "Hey, Greg, where's the stock market going?" And I'm like, I don't know. There's a bunch of probabilities, though. There's like a probability tree. There are obviously many factors that's what we were talking about. Economic data is going to be, a factor in the stock market. Even tomorrow, we have a really big inflation report, and if inflation is hotter than expected, just for reference, you guys, the Federal Reserve wants 2% inflation every year. That's their objective. Inflation. It's difficult to say what real inflation is, but sometimes it could be as high as 10%. They're saying it's about like 4%. Who knows? There's many factors within that inflation report. But if inflation comes out hotter than expected tomorrow, you will likely see oil prices go very high. And that means higher gas prices for the next few weeks or months or even years. And the stock market could take a short term correction. If inflation is cooling off and all the expectations are in line, we're good to go. The stock market could have another rally and potentially press higher. We're in an interesting spot with AI. We're in an interesting spot with the economy. We have the election. And the way that the charts are pressed, there's a lot of risk up here, but there's also a lot of reward. The returns are starting to ramp up in the S&P, and it can also be due to increased short selling. And so if there's more people that are trying to bet against the market, but the market keeps going higher, those people that are betting against the market eventually get squeezed out and they have to buy at much higher prices, and the stock market just keeps on climbing. Eventually, at some points, it can turn into quote unquote a bubble. I don't think that we're in a bubble, at least as of now. Or if we are, we're in the early stages of a bubble. But that's just something to think about. We talked about inflation. War can have an impact on the stock market, both short term, medium term, and potentially longer term. That's out of our control, though. To protect yourself, if there is war, if there is crazy inflation, diversification is really good. Spreading across many asset classes. Maybe you can invest a tiny little bit in gold, a little bit into the market. You can buy some healthcare, you can buy some defense, or just keep investing into your 401k. Or you can do what I like to do. And what I like to do, going based off history, you guys, the market tends to always go up. We have to go based off, the past performance. Past performance does not guarantee future results, as you'll hear with many investments, but it gives a hint. It gives a little bit more. It tells us a little bit more about the data set than nothing at all. Every downturn has created tremendous wealth for those that had cash. So if there is a big drop and you didn't go all in on the market and you have extra savings, that can be some time. That can be a time to deploy those savings. That's where you can make a lot more money. But timing the market is tricky, and it's my number one job. I'm not saying it's easy at all. That's why the tried and true method is just dollar cost averaging. And again, what am I doing? I like to buy. I personally like to always stay invested in the market. But then when there is fear, when there is severely depressed prices, I like to buy a little bit more, not a crazy amount more. If prices are really inflated, I like to sell a little bit more. That way I'm kind of having my core investments go higher, but I'm kind of giving myself a little bit of cash flow. I'm not always right, but I'm right more often than I'm not. So that's basically how I'm navigating the markets with the presidents. So
Greg,
yeah.
you mentioned, unless I missed it, have you mentioned interest rate cuts?
No, I have not mentioned interest rate cuts. That's a really good point. The Federal Reserve could be making interest rate cuts in March. And for those of you guys that don't know, just interest rates, that's just like how cheap is money? You know, how easy is it to borrow? If interest rates are really high, you know, there's going to be less loans being taken out, less spending in the economy. If interest rates are nice and low, people are going to borrow more, they're going to spend more. Interest rates are historically just kind of like average. They're higher in recent years because the Federal Reserve, the way that they combat inflation is by raising interest rates. They're kind of like trying to like slow down the economy. Slow down, you guys. So what they might be doing is they might be cutting rates to potentially spur the economy. I personally don't see a reason why they should cut interest rates. I think that they should potentially even raise them a little bit more to squash inflation, but that's just my thought process. If you look at market history, though, if they do cut the rates, sometimes you can see some intense volatility, and sometimes they can really tank the market when normally it might be perceived as good when they cut interest rates.
Well, when you're raising interest rates, especially on loans, it's really majorly affecting people with middle to lower income, because
Definitely.
you know it's harder for them to get a loan, and when they do get a loan, it's harder for them to pay it back.
Exactly.
You know,
Sell a house, you know, it's.
I'm just even talking about a simple loan. You need $1,500 loan from the bank because you have car repairs and you don't have warranty or whatever. That's going to be way harder for somebody middle to lower income when the rates go up. And then even if they do get the loan, it takes forever for them to pay it back because of the interest rate going up.
So that's where our social activist friend, the political scientist, weigh in here, because we're talking about the bottom line versus the social cost associated with the bottom line. Some folks might be better off with the social cost attached to it sometimes.
Because I grew up in an area. I grew up in Goulds, Florida. It's predominantly African American, lower income. I don't know what it is now. Harold lives there now. I haven't lived there in 20 years, but when I lived there in the 80s and 90s, it was severely lower income, and you could throw a rock, 5 miles in any direction, and no one in there could get a loan ever. So because of the interest rates at the time and the access to loans. So those are the types of areas I see affected when interest rates go up.
Definitely.
But interest rates are also how you fight inflation, and that's always the tricky choice, right? You know, because inflation is the curse of, it's a curse to people on fixed incomes, which are increasingly old people, and I'm getting close, and so it is. But the prime rate is what, 8.5% now?
Yeah, I think it's somewhere around there.
Which it is high. It was in the beginning of 2022. It was I was just looking it up. A couple of years ago, it was 3.5%, 4%. So,
well, I take it. So one of three of my staff members live in the Philippines. So like one of them was telling me, "Hey, the dollar went up for us." I'm like, "Well, that's great for you. It's not for me." He goes, "Why?" I said, "Because anytime minimum wage is raised or anything like that, everything around you becomes more expensive. Minimum wage gets raised, milk costs $1 more." So it's never.
But this is what we're talking about, though, where yes, interest rates are high, and it sucks if somebody needs a loan and the interest rates are really high. But they shouldn't be high forever if inflation actually gets squashed. So pick your poison. Do you want your loan rates to be high, or do you want the cost of goods and services to be lowered? It's tricky.
Yeah, and that's
I don't
why
have
there's,
all the answers.
that's why there's people smarter than me that are supposed to figure it out, because I'll never be able to.
We'll figure it out someday, I think.
Someday, do you know how many generations have said that? You're looking at Mark's generation. Harold's younger than Mark. I'm younger than Harold, and you're younger than me. Why do we keep saying this?
Hey, look, back in the 90s, I never forget I subscribed to the Atlantic Monthly back in the 90s, and I never forget the cover of the Atlantic Monthly one month was a recession-proof economy. It is the end of recession. We have no more recessions. Yeah, long that lasts. Okay.
Well, this is you guys. Last night we did the show Brilliant Swag, which is a show hosted by guys about just talking things from a male point of view, and we got into the discussion of this because we were talking about what we learned in school, especially public school, and we were all lamenting at the fact that this is the kind of stuff that should be taught at least in high school: compound interest rates, stocks, and all of these things. But no, we've got to do PE, home ec, and appreciation of art. And 1 year of foreign language is more important than all this other stuff that you don't get to learn about.
Well, basic financial literacy.
Yeah.
But I disagree with home ec, though. I think that's important.
Do you know what home ec is now, Mark? Home ec isn't what home ec was when you went there. Home ec is this period that you go in and you wait for school to start.
Well, I know they don't call it home ec in most places, for one thing.
Yeah. The subjects are weird. I learned more about sex education in PE than I did in sex education class.
Interesting.
Well, sex education, we call it in alleyways, not
I'm just looking at the smile on Dave's face.
Oh, the scroll down menu is just the things I'm thinking. Oh, no. We are not going there.
All right. Let's get everyone's opinion on the things discussed today overall by my good friend Weenie Greg Braham. And then Greg, tell everybody what you're doing. Talk about anything you want to talk about, Fidelis, Legion, all those things.
Yeah.
Yourself. We'll get to that, but let's start with Mark.
What's coming up, what I'm doing, and all that?
No. Your overall opinion of what Greg has talked about today.
Oh, okay. I was going to promote my new show, which I will. Crime Chronicles with Mark Jones, produced by Keone Productions, coming up, debuting next week, as they say. But I appreciate it very much. It didn't go sideways like it usually does. No, very insightful, Greg, and Dave as well.
Thank you. Yeah, that was really good. I enjoyed it.
Well, that was a quick opinion assessment. I wasn't expecting that, but
what's going to be interesting is kind of the reverse of what Greg was talking about, and that is how much presidents affect the markets. But as I think Dave alluded to it, or something like this, how much does the market affect the election? Are people going to vote or not?
Dog wag the tail wag the dog.
I'm really interested in, and Greg, I'm not telling you to go research. I'm just going to look it up myself because I was really intrigued when you talked about how better the market has done historically when there's I think you said Democratic president, but Republican Congress.
Flip that.
Oh, you said Republican president with the Democratic Congress, with the outlier being Clinton, the Clinton version that Dave talked about. So I'm really interested to see why that is. There's got to be a reason. It just can't. When things become a trend, it's a trend for a reason. It's not just doesn't happen because it happens. So I'm very interested to know that. Harold, what about you?
Well, I guess I'm having some connection problems, so I'm not sure how I'm appearing on the screen. But from my point of view, I'm frozen. But
you're perfect. You're moving. You're talking. Everything.
Awesome. Well, from what's been presented, again, I was enlightened as well as It makes me want to go back and do a little bit more research as well, because that was interesting where he pointed out the Democrat president Republican president, Democrat Congress. But I think also when I look at this whole thing with the markets, and although it's a part of or intertwined within the economy, it's also a factor of how people feel or perceive it. Despite what the data and the numbers may say, people still feel a certain way. And what we don't see a lot of, for example, with gas prices going up and then the cost of everything else going up, i.e. in the stores and everything, well, gas prices have come down, but because of those profits that those grocers are making, they're not in a rush to make that happen, or to bring those things down as well. But overall, I can appreciate what Weiner, I'm sorry. I don't
Both
know
are
who.
good. Both are the same.
Hey, I don't know. Y'all got me thinking. I love to call people by their first or last name, but you guys are throwing this.
You can
I've
call me
heard that
Greg.
name more than I've heard anything.
Yeah,
Greg. All
Randy,
right.
They're
Okay.
interchangeable.
I'll call him G Money since he likes
G Money.
money. He knows
I get that
about
one a
it.
lot.
I got you, G. So, but with
G-Money.
what G Money shared, I can appreciate what he's allowed me to learn. During today's broadcast, so that I can again pay attention to things in a different perspective, and then try to be a little bit more holistic in my approach, and not allow the trendy conversations to happen, but look beyond, i.e., the noise, so to speak. So thanks a bunch.
You said about groceries is funny. A person making minimum wage in some places that works an 8-hour day, and that 8-hour day, after they get done, they've made enough money to buy a gallon of milk, half a carton of eggs, and a box of cereal.
Depending
And if
on
you
where you
have,
live.
That is not true.
and if you have 3 kids,
That is hyperbole.
you better come where I live.
That's it.
$15.
Depends on where you live.
Yeah, that's what I said. In certain areas, I didn't say
Yeah,
everywhere
yeah.
in America. Geez, Dave, listen to me. I said depending on where you live.
I still want to, I want to do the math on that one.
Yeah,
But,
do the math on that.
but that leads to the point of perception.
Go to San. I'm just not perception. I'm talking about how much I spend when I go to the grocery store.
But you say this, and you and there's an underlying thing there.
Mhm.
But perception of people is the people's perception is very important, because when we talk, what we didn't get to today was the effect of the economy on politics, and a couple things that are there really quick to throw out.
Mhm.
We do see when people analyze and look at how people vote. If you had a bad year last year, you'll hold that against the incumbent party, whatever it
Yes.
is. However, the individual gainers and winners tend to balance each other out. So what actually changes is the perceptions people have, that voters, when they vote on economic issues, very often are what we call sociotropic, right? There's your fancy word for the day. Sociotropic means they vote on what they perceive the society as having. And so you may not be making minimum wage. You may not you might not have lost money in the stock market or seen your retirement fund wiped out. But if you perceive the economy as doing poorly, right, and you see other people doing it, that drives a lot of your that tends to drive your vote. And so that is part of kind of the interesting thing that drives people. And in some ways, that's a problem, because at least when people are voting off of what materially happened to them, there's a check to that, right? That there's some objective reality impact. But perception, right? People think the crime rates are up everywhere when objectively they're not.
They're
And
not. Yeah, especially
that drives these things. The same thing happens economically.
Mhm. Well,
That was
perception is my checking account and my receipts. So I don't know what you want me to do. And my poor decisions. Dave is like, don't leave that out. You're being facetious because you left that part out. Keone, your poor decisions.
your perception is your TikTok feed.
Mm.
What you scroll through. And or for older people, your Facebook.
Wow.
No, Harold's still on
MySpace.
Media.
MySpace, Dave.
MySpace.
Yeah, he's still on MySpace.
Wow.
Or what my dad called it, the iSpace. Ah, jeez. Um, yeah, it's about time to put him in a home. So
No, it's not. That's my brother.
I
He's gonna
I
be in
forgot
your home.
I forgot you were on the show. No, I would
He,
never do
he'll
that
be in your
anymore.
home. That's where he'll be.
Huh?
He'll be in your home. That's where he'll be.
All right. So on that note, uh, Mark, go ahead and tell them real quick because we got to end what Crime Chronicles actually is. You talked about the show that I was going to wait till the end. You talked about the show is premiering next week. Tell them what day and tell them what actually Crime Chronicles is.
So I believe it's Wednesday at 7:30, right? Twice a month, and basically look at some high profile crimes that have occurred. Most of them in the distant past. The first one we're going to look at is the murder of Amber Hageman, which gave us the Amber Alert system. And
Oh.
I've done some traveling here as well. I won't go into details on that, but I went to New Jersey last summer and did a shoot on the duel between Aaron Burr and Alexander Hamilton. And let's see, John, we also have one of the Scottsboro boys back in Alabama in the 30s.
Yes,
And,
I filmed that one. Yep. Mhm.
yeah, and a famous lynching that occurred in Graham of Wyatt Outlaw during Reconstruction. And let's see, we're going to do the assassination of President McKinley. I went to Buffalo to do that one. I've even gone international. I've done some video in Vatican City on this assassination of the Pope and a serial killer in Florence. So wherever I go, I try to do a shoot. And John has paid a very competent producer, a fellow in the Philippines, to kind of compile stuff for us. And we'll kind of sit and host this thing and look at it. And so far, I think it's pretty well done. So hope you take a look and perhaps maybe have you guys on as a expert panelist or something like that, especially Harold there.
Yes, the two I'm most interested, not most interested, but we have the Amber Alert in January. And then in February, we're going to do two high profile cases in the area for Black History Month. So I'm looking very forward to doing
Yeah,
those.
those is a Scottsboro boys case, and the other one is the lynching of Wyatt Outlaw, which that may not hit home to you very much. You may not know very much about that one, but that's a KKK lynching during the Reconstruction era. That's the short version of that.
All right. So, wait, we missed a. One of my friends who's is a little younger than me says I still primarily use Facebook. All right, we still have people in their 30s using Facebook. That is awesome,
Hey,
and they
Mark.
commented from Facebook, so that's funny.
Hey, Mark. I hope you also include the Groveland boys situation that happened here in Florida. And also in recent news, you got the situation that's going on just outside of Jackson, Mississippi, where there were 215 persons outside of that jail. So I'd love to see your investigative work on that as well.
Well, I mean, there are so many out there, Harold. I mean, it's really hard to narrow it. Plus, part of it's opportunity as well. And I'm trying to stay away from cases, though, that are kind of, I think maybe the one in Mississippi kind of fits this category, that are still kind of ongoing. It has not really been finished yet. So,
Gotcha.
but I'm also a history buff, so some of these cases kind of come from history and just have an interest there. So, and we got some that are just pretty good whodunits. One that occurred in near Asheville, and one that occurred a 3-state case that occurred both here in Greenville and in Maryland and Delaware. That was profile documentaries. So, I mean, the sky's the limit. So, I'm just doing what I can, and I'm like 4 or 5 months out now as far as having enough.
I can imagine.
And we're definitely trying to do both. Excuse me. We're definitely trying to both do some that are popular and then some that have not been popularized that no one has any idea about. So what I'm going to leave you all with a preview to trailer for Crime Chronicles, and then we will see you all in 2 weeks. Let's do it.